E-mini gapping up. Looks like we have to go up to test the top of the sell climax from Thursday, which is almost at the all-time high. On the daily chart, sideways for 8 bars in a tight trading range like this. You can see here we got a new high above that big sell climax, but only lasted a day or so. There's no top yet, but I think the upside is limited, and I think this is probably this and this and this. Friday we had a bull inside bar after an outside bar, so it's an IOI. While it's possible today could be a bear trend day, this looks like a pause in a bull trend and therefore a bull flag, and it's a decent buy signal bar, and we're gapping up. While it's possible today could be a bear trend day, I think trading range day or bull trend day probably are more likely. Most days over the past several months have had a lot of trading range price action. Just look at all of those tails. Every one of those tails represents a reversal. It means the market went one way and then the opposite way. We've been in our tight range here for 8 days. And that also means a lot of trading range price action. Friday, a lot of trading range price action here. Thursday, we had several hours before we had the collapse. While I don't think the upside is very big on the daily chart, weekly chart over the next few months, there's no good sell signal yet, no good entry bar yet, and no strong bear reversal yet. So therefore the odds slightly favor at least a little bit more up. Weekly chart. This is now 37 weeks without touching the moving average and without getting particularly close to it. This is not all that close. So the most extreme buy climax in the history of the E-mini, but there's no reversal, and climaxes can go a long time. In 2003, the market stayed above the moving average for 50 weeks, although it got very close twice in the middle, and the pullbacks that we've had in the current rally did not get close like that. That relieves some of the overbought condition. Weekly chart last week, a doji bar, so a stall in the breakout. Monthly chart, today's the last day of the month, and the month almost certainly will end up with a big bull body closing above its midpoint. Will it close above last month's high? Probably. Last month's high is about 20 points below where we are, and therefore the month is going to be a bullish bar. It'll be the 4th consecutive bull bar, the 3rd consecutive bull bar after breaking above the April high one buy. Extremely climactic. This is now 9 months in a bull microchannel, occurring very late in a bull trend, 7 years into a bull trend. And whenever you see extreme strength late in a trend, it's usually climactic, which means the market probably will start to transition into a trading range, but no sign of a top yet. You can see here we went up for a lot of bars before we got a trading range. All right, so we're 4 minutes, almost 5 minutes into the bar, and it's relatively small and spending a lot of time in its middle. And that's warning us that today is probably going to be like most days over the past month and have a lot of trading range price action early on. All right, closed near its high, 1 tick tail, So that increases the chances of a bull trend day, but not much enthusiasm. And near the top of a trading range that has gone on for 8 days, the bears want a lower high, major trend reversal, head and shoulders top, left shoulder, head, right shoulder, and the bulls want trend resumption up. If we do go to a new high and then reverse at the new high, the 60-minute chart will have an expanding triangle. Right now, if we reverse from here, a lower high, 2 legs up, 1 pullback, 2, and then we get a lower high, major trend reversal, bull trend, strong bear breakout, and then right now, the bear is trying to get a lower high, head and shoulders top, left shoulder, head, right shoulder. What do the bulls do who bought above 1 now that it's outside down? Well, first of all, I would not buy above 1. And second, since we've had so many trading range opens, there probably are buyers below 1. And we still have this is not Friday's high, this is Thursday's high. Here's Friday's high. So we still have room down you can see on the daily chart, we still have room down to Thursday's high. That's actually not even Friday's high. That's just the high of the reversal on Friday. Let me get rid of that. All right, so bears made money selling above 1, a bull bar. Bulls probably bought below 1, looking for a scalp, and so therefore this looks like another trading range open, which means we might go sideways for an hour or more before we decide on the direction of the first swing of the day. It also increases the chances that today we'll have a lot of trading range trading again. Target above the top of Thursday's huge sell climax, which is right at the all-time high, and target below, closing the gap above yesterday's high. This is really the most important support. So we have resistance up here, support down here. Can you buy like right now above 1 or above 2? Arguing it triggered the buy above 1 and went below 1, and now it's breaking out above 1 again. This is a limit order open, and I would wait for the bars to get bigger and wait for consecutive strong bars before trading it like a trend. You can see limit order bulls made money buying below 1. That's the close of the second bar, and here's a 10-minute chart. Not a very good looking buy signal bar, especially after so much trading range and after reversals. So it looks like a limit order open. Always in long, we gapped up, and we were always in long at the end of yesterday. And now we've had a pair of bull bars, but a lot of traders are unwilling to buy up here. Globex chart, strong breakout, pullback. The bulls are hoping this is a resumption of this bull trend, but the lack of consecutive big bull bars increases the chances that this is a bull leg in a trading range, and that we'll have to test back down here. What do we do if it's a bear IOI? Well, 2 trading below 1 was a failed breakout above yesterday's high, and if 3 is a bear inside bar, and then 4 trades below 3, that would be a second failed breakout above yesterday's high, and that would be a higher probability sell. But let's say 3 has a 2 or 3 tick tail on the bottom, then I think a lot of the bears will not take the short. If it's a bear inside bar looking just as it does now, it would be an okay swing short, We have support not far below yesterday's high 60-minute moving average. Will it result in a swing? To me, this is 3 sideways bars. One is a doji. None of the bars is all that big. While it's possible that this could end up being the high of the day, I still think the odds are we're going to be mostly sideways for the first hour or two. Even if we come down and test the 60-minute moving average, we'll probably bounce and form a trading range in this area. Sometimes this something like this ends up as the high of the day, even if the market goes sideways for several hours first. Bears trying to create a credible sell setup. Two-tick tail on the bottom. A lot of traders will not take the sell. You're selling a tight trading range, so the probability is not as high as traders want, so it's probably not a good scalp, but it's a possible high of the day and okay swing. 2-tick tail, 3-tick tail on the bottom. I would wait. Sometimes you get setups like this that look okay, and then the market goes mostly sideways, and then you look back at the end of the day and say, wait a minute, it did end up as the high of the day. Like Thursday, we went sideways for 3 hours, yet we could not get back above that high, so it ended up as the high of the day. Here does not look like a very good short. This does not look like a very good short, but it remained the high for the rest of the day. This one did not. We went above it by a tick over there. This remained the high for the first 5 hours or so. So a lot of times early on, here remained the high of the day. A lot of times early on, the market has a swing setup that does not look all that good, and then the market does not sell off strongly. It just kind of goes sideways for a lot of bars. Yet when you look back at the end of the day, you say, hey, it ended up the high of the day and never went back above 2 or 3. For the bulls, they want a high 2 bull flag, high 1 above 1, and then high 2 above 4. Right now it's on the short, stop right now above 2. And for the bulls, if 4 is a decent bull bar, it's also a buy setup for a possible low of the day. 4 bar tight trading range, doji on 1, reversal on 3. I think it's more likely that we're going to pull back more and get down to the moving averages, and therefore I think buying above 4, I would wait. It's pretty common to have something like this where you trigger the sell on 3, and then 4 becomes a buy signal bar, and you look at it and say, darn, I didn't want that, right? But that's pretty common, and you cannot do both. You cannot sell below 3 and buy above 4, and then wait for both. Wait for one to be good. You either take the swing below 3 and keep the stop above 2. Or let's say 4 is a good buy signal bar, then you take the buy above 4 and put a stop below 4 and you wait. Or, you get out, let's say you short below 3 and 4 is a decent buy signal bar, you get out above 4 and then you look to sell again. Everybody wants things to be clear, clearly bullish, clearly bearish. The market's telling us that this is trading range price action, and therefore we're probably not going to get clarity, maybe for an hour or more. I think we're always in short, even with just the 2 bars, even though they're not particularly big. Stop for the bears above 2 or above 3, probably above 2 since it's only 1 tick higher. And the bulls are hoping for some kind of an opening reversal, a high 2 buy. They have a high 1 above 1. And looks like we're testing yesterday's close and yesterday's high, which would be around the moving average. The bars are small and the bull channel is tight. While we're always in short, that increases the chances that we may go sideways for an hour or two. Stop order bears were able to make 1 point, which is good. Three consecutive bear bars, always in short, but not all that bearish. The bars are not all that big. Remember I said on the Globex chart that we had a strong rally and a pullback and a resumption of the bull trend, but the absence of consecutive bull bars made that rally look more like a bull leg in a trading range, and that increased the chances that the market would have to test down to the bottom of the range, this area. Bears who are selling for any reason, right? Their stop is the same, whether they sold below 3 or sold the 5 close, their stop is still above 2. I think it's going to be difficult for the bears to break below the support because the bars are so small. There's not much momentum. Bulls trying to keep the gap open. They'll try to keep it above the 60-minute moving average. They're hoping for a reversal up from this support level, yesterday's close, yesterday's high, and both moving averages. But always in short, probably first reversal up, there'll be sellers above. 2-point bears able to make a profit. Good for the bears, always in short. We're at a support level, so if you did short and if you are able to trade multiple contracts, this would be a reasonable place to take part off. By the end of bar 7, 50% chance we've seen either the high or low of the day. While it looks like the high is more likely than the low, the bulls still have a chance of an opening reversal up. We're near the bottom of the channel, and we're at the 60-minute moving average, the 5-minute moving average, yesterday's close, so it's a support zone.
Muted.
4-point bulls need it to get down a little bit more. I sold and I thought I had my limit order 4 points down, but I had it 3.75 points down, so I just looked over and I saw that I'm out. So I'll look to sell it again. What about buying? Betting on a climax that gets back to the 60-minute moving average. While this is climactic, I think it's not worth buying. And this bigger bar is a climax, and that makes a lot of the bears hesitate to sell right here. I am looking to sell again. Enough momentum to get us all the way down below yesterday's low. On the daily chart, yesterday, Friday, was an inside bar after an outside bar, and it's a bull body, and therefore it's a buy signal for a bull IOI, a high 2, high 1, high 2, but we're in a 9-day tight trading range, and the chances are we're going to continue sideways. We're not all that far above yesterday's low. We're only 7 bars into the day, and we're more than halfway down to yesterday's low. Good area for a bounce, a 50% pullback from this rally, but it makes me wonder if we might go outside down today. In other words, trade below yesterday's low. Not likely. 50% pullback here for the bulls, and for the bears, rally 50% pullback here. Strong sell-off, but about a 50% pullback from this low to that high. So we're in a profit-taking zone for the bears. If bulls buy, I'm not buying right now at least. If bulls buy, stop probably below yesterday's low, the 20 low, and they're scaling in lower. For the bulls, targets are yesterday's high, the top of the sell climax, the 7 high, maybe the 6 high, less likely all the way up here. Usually, if you're going to get an opening reversal up from support, the sell-off is not as strong as this is. So right now, we know there's a 50% chance we've seen either the high or low of the day. And it's obviously, at the moment, much more likely that we've seen the high of the day. Bears want this to be that. They want any reversal up, like 40, to be a low 1 bear flag, resulting in a collapse. And usually if you get a bar like 40, there are buyers below. Bar 8 is like 40 back here on Thursday. There probably were buyers below, but in fact, there were not. And that increases the chances that we were going a lot lower. Probably buyers below 8 today, but swing short. Maybe 30% chance that we get a repeat of this, which means 70% chance we do not. What do the always in traders do? I would get out of at least half right around where we are. You have 4 points. And for the bulls, betting on the opening reversal, I would not buy with a stop above 8. It's better to be buying with a limit order below 8 or waiting to see if we start to get 2 or 3 big bull bars and then buy closes. Odds are right now, we've seen the high of the day, and whatever rally we get will form a lower high. Three bear bars, opening reversal for the low of the day. Very strong sell-off, but it's a second failed breakout below yesterday's low. And so we broke below yesterday's low, we gapped down, reversed up, resumed down, reversed up a second time. This is therefore a higher probability buy. It's also a lower low major trend reversal. We do not have this today. You can see you can totally collapse on the open and still have the low of the day. Usually if you get a collapse and a rally, the rally channels up. It just looks weak, but it can go on a long time. This is what the bulls are hoping will happen today. Always in bears, I would get out above 8 if you did not already take profit. Again, if you get a collapse and then a reversal up for the low of the day, usually the reversal has a channel look to it, a lot of trading range trading, a lot of sideways price action. This is similar to today, right? If we go sideways for a few bars, we'll probably get at least another leg down. But I think even if the bears do get another leg down, it'll probably look like this and not like that. Trading ranges are much more common than extremely strong trends. So even though we're selling off strongly like this, I think we'll get some kind of a bounce within the next hour or two, and I think the odds are against the market falling a lot lower. Here we went down a couple more legs, but that was it for the day. Less likely we just keep selling off all day. These extremely strong bear trend days only happen a couple times a month. Might get a small second bottom and then a reversal. Remember, we've had a lot of reversals lately. Today, it's like this, a second failed breakout yesterday's high, and this is like today as well. I think we'll get at least a small second leg down or sideways, but probably not a lot more down. Again, tried to reverse down from above yesterday's high, and then tried a second time, and we got the high of the day. Tried to reverse down from above yesterday's high, tried a second time, and this remained the high of the day. We got up to this high, but never above it, so we never hit the stop. For the bears, again, they want 8 to be like 40, a low one sell leading to a huge collapse. More likely limited downside from here. Always in bears, still short. We're at a support level, both moving averages, and a higher low, and around a 50% pullback from this low to that high. So we may go sideways here. Strong enough momentum. Right now, the odds are sellers above, and that we'll get at least a small second leg down. While it's possible this is the low of the day, I would wait for a better bottom before entering with stops, or for a series of bull bars and then buy higher. The bulls want the opening reversal up. They're hoping for that, or this. Probably we're going to get at least a small second leg down. For the bears, if they're selling here, stop is above 2. Not a great looking sell above 8 or below 10. If 10 is a decent bear bar, 10 technically it's a low one short, but we have a sell climax, a micro double bottom, and we're at support, 60-minute moving average. Pretty common for the market to fall, 5 or more points below the 60-minute moving average, yet still find support. Here it fell a couple points below. Here we sold off 3 points below. Resistance, it went 3 points above, and still resistance. Here we sold off about 4 points below the 60-minute moving average, sold off below 2 points, 4 or 5 points, and was support. So I'm just making the point that 5-minute moving average, if it's support, you expect the market to find to bounce within, a point or two. But 60-minute moving average, a lot of times it'll fall 5 or more points below before you get the reversal up. Not a good entry bar for the bulls, not a good sell signal bar for the bears. And we're at support and around 50% pullback. So we might go sideways here, more bars. A lot of the bears are happy to sell, but they want to sell higher. %50 pullback, no surprise, right around yesterday's high. Low one short, but 3 hesitation bars at support. I think you're only selling that if you're putting a stop above 2. I suspect that we're going to go higher. Where do the bulls come in? Well, I think the best the bears get is something like this. So bulls might start buying at the prior low for a bounce, buy for a bounce. So, I think we're going to start going sideways, even if we go down a little bit more. So a little bit tricky to trade right here because trading range likely, not likely to get all the way down to yesterday's low, not likely to get all the way back to today's high, and therefore probably a trading range. And the market's looking for the bottom of the range, probably somewhere down here. And then it'll look for the top of the range, maybe somewhere above yesterday's high. For the bulls, micro double bottom, you can see they bought 1 point below 10. As far as a stop entry bull goes, betting on the opening reversal and the low of the day, this is looking like a limit order market. With the bears, 5-tick trap so far below 10. So the bears have a low 1 after a strong sell-off and cannot make money selling with stops. So increases the chances that we're in the early stages of a trading range. Will the bulls buy the 7 low or 1 or 2 points below 7? Some will buy the 7 low and 1 or 2 points below. Others will buy 1 or 2 points below. And then others will wait to see if we get a stop entry buy, a reversal up. And so is this behaving like this? We tried to reverse up, and here we had a big surprise. We do not have that surprise. Here we tried to reverse up, and we just collapsed. Okay, so we're not looking like this or that, at least right now, not yet. Looks like we're going a little bit lower today. I think we'll get down to here, maybe here. We may bounce first. Bulls might buy here, but this is obvious support. And right now, what do you think? Bull trend, bear trend, or trading range? Of those three, the least likely is bull trend. And therefore you're left with bear trend or trading range. Bear trend or trading range, usually the market will get to support. So we should get down to the 47 low. If instead we get a strong bull bar, 13 or 14, traders will buy with stops. But right now, a lot of the bulls, although they're confident that we're not going to collapse like we did on Thursday, they see the support below, and a lot of them are hesitant to buy. Some bought the 10 low, some bought the 7 low, but more of them are interested in buying down here or here. "15-minute Globex chart, reversal, up strongly, then totally reversed it. Here's the Globex low, a little bit below. What about buying with a limit order or at the market right here? Well, this is a logical location for a bounce. So I'm not opposed to doing that, but stop probably below 20. And it's probably better for the bulls to wait to see if they can get a stop entry buy, or for the market to go at least a little bit sideways before taking the buy. And for the bears, if you're selling, I think it's better to be selling pullbacks, so I would not sell down here. This would be a profit-taking area. Why not sell and take a chance that this is like this or that? Because first of all, it's probably not, and the context is different. Here we're at support, and here we're well below support. And this was a big surprise bar, very big bar. And we're not getting that same urgency here. There's no sense of, oh my gosh, that shouldn't be happening. This looks more like a wedge, 1, 2, 3 at support. So it's more like this kind of a chart. Maybe you get 2 or 3 pushes down and then a bounce. I doubt we'll go all the way up like that, but I also think the downside from here is small. Limit order bulls, 7 low. They're on the verge of making money. Buy 7 low, buy more 1 point lower. I had an order to buy at the 47 low, did not get filled. I probably should have bought 1 tick above, allowing for the possible double bottom. Will the bears sell 14 high? I would not. Limit order bulls made money scaling in below 7. I still think we're probably going a little bit lower, but I would rather sell higher. If I thought today was going to be a bull trend day, then I would be thinking that this double bottom would hold. But I think it's more likely going to be entering a trading range. And when the market is in a trading range and there are 2 obvious support levels below that are close to one another, the market often goes below one, but not the other. So I think we're going below 47. I don't know if we get below 25. Right now, I think we will not go below yesterday's low. So I think we'll soon start to enter a trading range. So big down, wedge, 1, 2, 3, sideways at this price yesterday, resistance, 60-minute moving average, top of the final bear leg, probably trading range beginning soon. Less likely will reverse and trend up for the rest of the day. Possible low of the day. I think still losing short. I think the odds favor a little bit more down, but if we start to get a series of bull bars, 4 or 5 consecutive bull bars, then this could end up as the low of the day. When you get a strong sell-off and a reversal up, the first reversal is usually minor, and the bulls usually need a test down and then a major reversal, major high or low. Probably not enough bars here for a major lower low, major trend reversal. More likely minor reversal. If we get a reversal, I still think we're going below 47. Well, we're going to continue down to yesterday's low. Probably not, but we're in the buy zone. We have 2 support levels here and here. And if this is going to evolve into a trading range, and you have 2 support levels, the market typically, or very often, falls below one, but not the other. So this is the market's deciding, are we going to evolve into a trading range? And the answer is probably yes. Can you sell the breakout below 14? No, I don't think you can be selling lows. The limit order bulls made money below 8. We're at a logical support area, a pullback from the original breakout, bottom of a channel. Can stop order bulls buy 17 high with a small wedge, 7, 14. We're starting to get prominent tails, 14, 15, 16. And while it's a possible low of the day, I suspect bulls would rather be buying with limit orders than with stop orders. What are the chances that we get all the way down to yesterday's low? I don't know. I would say less than 50-50. Stop order bulls, if they get a decent buy signal bar, and if it's not too big, they'll buy above 18 for a scalp, in part because it's bar 18, and usually the 18 bar range, the first 18 bars, you have a 90% chance that you're going to have either the high or low of the day in the first 18 bars. Obviously, we have right now probably a 90% chance, 80% chance we've already seen the high of the day. I think we're in the buy zone, right? We got these 2 higher lows, and if today's going to have a trading range, which it probably will, and you have 2 support levels, the market often goes below one, not the other, and then bounces. So this is a bounce zone here. Five ticks above 14 low, and little bit of hesitation because you have the limit order bulls taking a 1 point profit, and now the stop order bulls will buy above 18 if it closes on its high. What about swing or scalp? Tough call. I think we're still always in short, and this channel is so tight, even though it's a wedge, it's not a reliable swing buy setup, and therefore the bulls buying above 18 probably will scalp. Obvious targets, moving average, 60-minute moving average, and then the top of the wedge. I think 18 is an interesting bar. If it closes on its high, it increases the chances that we'll get up here. If it does not, it increases the chances that we'll go sideways down here instead of going up there. This bar is giving us information about what the next 5 to 10 bars will do. The more bullish the bar is, the more likely we've begun to move up to the 10 high. The less bullish the bar is, the more likely we'll go sideways, maybe even a little bit lower. Limit order bulls made money scaling in below 7. They made money buying the 14 low as well. We're in a bear trend, but bulls are starting to make money, and that increases the chances that the bear trend is transitioning into a trading range. Stop order bulls made money, and we have a wedge. Because the wedge is in such a tight channel, it's probably, and plus it's small, it's only about 10 bars or so, 15 bars, it's probably a minor reversal and the start of a trending range and not the start of a bull trend. We've had so many reversals over the past month that the bulls want the reversal, but they're probably going to need a test back down to some kind of a higher low. Here, this is actually pretty comparable to today. A little bit more bars in it and more big bars in it, and it became the low of the day. I've had this up for a while because I thought it was a reasonable template for today. I think today is less bullish than that day. We had one good bull bar here and one there. So in the wedge, we have 2 good bull bars here. And in this wedge, we had 4 bull bars here, 2 here, and then 1 there. There was more buying pressure in this wedge than in this wedge. And I think today is therefore less likely to do that and more likely to do something like this. We do not have this kind of strength, but even with this, the bulls still needed a higher low major trend reversal. And what are the chances that we continue down in a bear channel? I think it's not likely. For the bears, double top 16. They want to break below 18, the 18 bar range. I think bulls will buy the 18 low just like they bought the 7 and 14 lows. And the bears see the wedge. A lot of the bears will wait for at least a couple small legs up before selling. Limit order bulls made money below 7 and 14. Stop order bulls made money above 18. And we have a wedge. The odds favor at least a small second leg up. And even though the bears have a double top bear flag 16, probably buyers below 19 or 20. That's a low probability sell. I think we're still always in short. I think a trading range is more likely than a big reversal, but we're obviously much more neutral than we were a few bars ago. What are the chances that this remains the low of the day? I would say more than 30% chance, maybe 40% chance that we've seen both the high and low of the day. So it's slightly more likely that we'll get one more new low, but if we get one or two more bull bars, then the probability that we've seen both the high and low starts to go up 50%, 60%, 70%, depending on if we start to go up here. I keep working on this collection of examples, and you can see down here I now have 400 slides in it. I'm trying to get a good collection of just about everything that the market can do in just about every situation. It's easier for me to point to slides and say what I think the market is doing than it is to just talk about it and try to describe it. Three consecutive bull bars, but 1920 not all that strong. So technically, I think probably still always in short, but I also think that we're probably not going to go much lower. The bears want the double top bear flag here and here. Usually if the second high goes above the first high, the chance of the double top falling for a measure move goes down. And if it goes a lot above the first high, the chance becomes very small. We're 2 ticks above the first high, the 16 high. What about selling the moving average like at 10? I would not. If we dip down and get a double bottom 18, that could be a buy. And for the bears, still always in short. Where's your stop? Above 10. That's the top of the most recent strong leg down, so it's a major lower high. But I think a trading range is likely. I think that's probably not a great location for a stop. You probably still need a stop above 3. But you would never let the stop get hit. You'd get out before then. There's a big magnet at the 10 high. Right now, I think we are going above the 10 high at some point today, and therefore it's a bad stop for the bears. Suppose we get 4 or 5 bull bars. Well, I'd like to see at least 1 or 2 of them close above the moving average in the middle of a probable developing trading range. Buyers, we know there'll be buyers below 18. There were buyers below 7 and below 14. Even though it's a wedge, and if we break below 18, it's a failed wedge. In general, 50% chance you get a measured move down, 50% chance. There are buyers below and you reverse up. Here, with so much trading range price action around this price, I think 60% chance there'll be buyers below 18, only 40% chance it'll lead to a measured move down to yesterday's low. Body's getting small, tail's getting prominent since bar 14, so getting trading range price action. Traders want to sell higher near the top and buy lower near the bottom. Bull bears start selling above bars above 19 and 20, arguing the rally looks more like a bull leg in a trading range. I think if you're selling, it's better to be selling above bars, but I still think we're going up to the 10 high. Trading range, you're never really certain where the top of the legs are, where the bottoms of the legs are. The market tends to spend a lot of time in the middle. And because of the uncertainty, bears tend to sell above bars, use wide stops, scale in higher, betting that eventually it'll reverse. And bulls tend to buy below bars and use wide stops and scale in lower. Even though this might be converting to always in long, unless we get a strong bull bar on 22 or 23, I doubt that we're going a lot higher. This is near the end of the hour, and bulls trying to reverse that sell-off from here. First hour big sell-off, bulls trying to get a reversal. Fairly tight channel. We had 7-bar bull micro channel, and therefore you get some buyers down here. This also looks like sideways, big up, big down, sideways. 5 bars up without a bear bar, 5-bar bull micro channel, so probably buyers below and scaling in lower. But the bars are getting small and sideways, so there may not be much. We may be entering a tight trading range here or soon. If we're starting to go sideways in a very tight range, it'll be very difficult to make much money until the range ends. I think the bulls need to do at least a little bit more to make it always in long. When I say it's still always in short, I'm not expecting a bear trend. I'm expecting the market to stay sideways. But if the bulls get 1 or 2 good bull bars, that would make it likely 18 will remain the low of the day. And, it would increase the chances that the bulls could begin some kind of a swing up. Maybe like this. And later in the day, they got trend resumption up. They could have as easily got trend, I'm saying trend resumption up, resumption of this bull trend, reversal of this bear trend, but this could easily have been down. It's no coincidence that every bar is a bull bar or not a bear bar, right? The bulls are trying to take control. And we got a 60-minute close coming up. And the bulls want this to be like this, just a pullback in a bull channel. So they want this hour, the past hour, to be a buy signal bar. limit order bulls 22 have not yet made money. So that's a sign that the bulls are not yet very strong. The stop order bulls 18 have been in control now for 6 bars, and they do not have a 2-point profit. And so if it's a bull trend and it's rallying for 6 bars and you do not make 2 points, then it's really not much of a bull trend. Suppose it's another bear IOI. I'm going to wait. This is a very tight range, and probably buyers below, sellers above, and more sideways. Traders want to sell up here, and buy down here. 1 minute left to the hour. So far, not a particularly strong buy signal bar, 60-minute chart. These bars are very small, and that lack of energy makes a strong reversal up unlikely. Even if we do channel up for the next several hours, this is not all that bullish. What happens if 24 has a bull body? Then, I don't know, we might be always in long already, but if we get a bull body on 24, I think most traders will conclude always in long, even without a strong bull breakout. Okay, so that's probably enough for traders to believe that it's more likely we're going higher than it is that we're going lower, but I don't think we're going to go very far up or down. That triggers the buy on the 60-minute chart. Does that buy signal look strong enough to reverse that big bear bar? Probably not, and therefore the buy probably will not be the start of a bull trend. More likely will go sideways. Bull is trying to get a bull break above a bear flag. I want a measuring gap here, which would take us back above Friday's high. Probably about an 80% chance we've seen the high of the day, and 60% chance we've seen the low of the day. But I think we will get above the 10 high and back up to Friday's high. Will we do this? Too early to tell. But even with the bears only owning the first 5 bars and the bulls owning the next 76, the bulls could not get above the top of the sell climax. Bulls trying to accelerate up, but the bars are not all that big. Probably the top will be around Friday's high, the 10 high, 60-minute moving average. Just like this was the buy zone, up here is probably the sell zone. We may not become always in short again today. When we get these reversal days, the market sometimes just, stays, the bears keep trying, but they never succeed, and we just keep drifting up all day. another reversal. Even though sideways for 30 bars, we just kept working higher. Whenever you're in a fairly tight channel that lasts a lot of bars, it's kind of a FOMO, fear of missing out type market. Traders are buying, hoping that it keeps going up, but they're buying small, knowing that it could be a bull leg in a trading range and we could reverse all the way back down here, and they want to be able to add on lower. So they keep buying small, confident that we're either going up or in a trading range, believing that we're not going to get a bear trend. So you get traders just, wondering, oh, maybe we'll go higher. I'll buy small just in case. I don't think we're going to go lower, but we'll either go sideways or up, and I don't want to miss the trend, so I'll just buy small. Because this wedge channel is small and tight, I think we're going to have to test back down at some point today. However, the bull channel is very tight as well, and the bears will probably have to make the market go sideways for 5 or 10 bars before they can get a test back down. So yes, we'll probably test back down, but not in the next few bars. Remember I said I thought we'd get above the 10 high, and therefore it's a bad location for stops for the bears. I think the bears should be out anyway, but if they are holding short, I think the 10 high is not where their stop is. Because just like when we were selling off, I thought it probably was going to be a bear trend or a trading range, in which case you'd expect the market to fall below support. We're going up, so I think it's either a bull trend or a trading range, and you expect it to get above resistance, the 10 high. Can you sell right here, betting that the rally is weak and probably not going a lot higher? Look at how big the pullbacks have been. Since 18, the biggest pullback has been 6 ticks. So easier to make money as a bull, but not easy to make money even as a bull. We're probably not going to go all that far up. Bulls hoping for a measuring gap. Takes us up to the 2 low. Not a great looking short, but the tightness of this channel made the reversal up probably minor, even though it's always in long. The odds are it was a bull leg in a trading range. I'm not confident that we're going to fall very far. Maybe we'll come down to the 18 high, right? But chances are we're just going to stay sideways. I am flat at the moment. I wouldn't buy, always in long, but you probably need to stop all the way down here. Second entry short, 30, but only one small bear bar in the past 14 bars or so. Still always in long, but probably in a tight trading range and probably difficult to make much money for the next hour or more. Better to be long than short, but probably not going a lot higher, at least for a while. On these reversal days like today, today's the reversal day, we went down, we're trying to go up. A lot of times the market goes sideways for 2 or 3 hours. This is similar to today. You can see most of them, the market went sideways. It resumed up, but it went sideways for a lot of bars. This is much later in the day. You see the reversals, a lot of sideways trading. My general rule for pullbacks when I'm looking for a major trend reversal is that I want the pullback to retrace at least a third of the rally. And we're right around there now. So this has gone low enough so that if we go sideways here and reverse up, it would be a higher low major trend reversal. For the bears, they have a double top. They want to break below the neckline and then the measure move down. I still think 60% chance we are not going to fall below the low of the day, and that we've seen the low of the day, and 80% chance we've seen the high of the day. So probably buyers somewhere around where we are and above the low of the day. So the bulls buying stop right now below 18. They're hoping for a stop entry buy, but it's probably more of a limit order market. Traders buying 30 low, 29 low, 1 point lower, buying the 23 low. What do the bears do? I would not sell below bars, below 29, below 23. If you were selling, it's limit orders above, and it's too late now, 29 high. Suppose we get 3 or 4 consecutive bear bars. Well, we might get always in short again, but I still think more likely we're in a trading range and this is going to form a higher low. You can see the problem with a very tight wedge. Usually it does not go straight up. Usually you need to get a higher low, a major trend reversal. Not always. Sometimes you don't. Here we got a higher low. It retraced at least a third of the rally. So higher low, major trend reversal. Here, mostly sideways for about 6 or 10 bars. Those examples, much more bullish than today. Look how strong that is. We do not have that. Even this, I think stronger than today. Today's rally has a lot of dojis in it. Looks like a bull leg in a trading range. Not a good looking high 2 for the bulls. But for the bears, not a strong reversal. So that leaves us with confusion and probably more tight trading range. We're below the 30 low, so theoretically bulls could still buy here. They want to be buying below things, so they buy the 30 low, they buy more 1 point lower, or they buy the 27 low, or they buy the 23 low. Since this looks like a trading range, that increases the chances that we'll get a deeper pullback, like to the 18 buy signal bar high. Still always in long. Suppose we get 3 or 4 consecutive bear bars, 5 bear bars. As long as we stay above 18, we'll probably stay always in long. If we start to get consecutive 3 or 4 bear bars closing on their lows, then we could switch to short even without getting below 18. We have a bear bar 27, then a bull bar, bear bar 31, and then a doji bar. So this is beginning like a bear leg in a trading range. The bears need consecutive bear bars to make traders believe that the bear trend is resuming. High 2 buy, but better to be buying with limit orders at lows 27 or below, a point below bars 30. Higher low, major trend reversal, but probably not enough bars down. So the odds of this becoming a big bull trend are less. I think we're going above the 10 high, and as I said, on these reversal days, a lot of times it just goes sideways up. So There's, I think, an upward bias. Here we went up a little bit, but mostly sideways, a little bounce at the end. Sideways, sideways and up. So it's slightly more bullish than bearish, always in the long, but I think most bulls are scalping. 4 ticks above 29 low. The limit order bulls need 5 ticks. The bulls who bought the 30 low and or 1 point lower got out here, 1 tick above the 30 low. Stop order bulls 33, not high enough probability for a scalp. They're buying, betting on the major trend reversal, but does not look like enough bars for the pullback that leads to a major trend reversal, and therefore probably more sideways, maybe a little bit more down to the 18 high. And you short up here, double top pullback, double top 10 and 27, and this is a pullback, maybe a bigger second leg down from the wedge, a wedge, 2 legs up, 1 pullback, and then maybe this might be part of the pullback, so it might be 1 A, B, C pullback, and then second leg up. I think we're always in long, and but I think it looks like most of the bulls are scalping, and for the bears, because we're always in long, and because the bulls have done enough, it makes me not want to sell here. And for the bulls, I'm scalping, and I think it looks like most traders are scalping. Buyers or sellers here, 30 high. Bulls want the gap and the measure move up, and I think the odds are against it. No surprise it takes us to a new high of the day. Probably the bears selling here will be okay, but I would rather wait for a bar or two before thinking about selling. Bulls, they want a successful breakout. This is the breakout bar, but they also need the follow-through bar. So this bar and the next bar are important. 60-minute chart. I think the size of that bear bar, followed by this doji, makes sideways more likely than up. So 60-minute chart looks like this breakout. On the 5-minute chart, it's not going to go very far. This doji bar on the 60-minute chart does not look like it's strong enough to reverse that bear bar. So do you sell below 37? If it closes at the 36 low, you might consider it, but anything less than a really strong bear bar, the odds are we're going higher. So the odds are buyers 37 low. I don't know that we'll go all the way up to the high of the day. Right now I think that we will not, but every bar that goes higher increases the chances that we'll eventually get there. Right now probably 70 or 80% chance we will not get there. For the bulls, a pullback from the breakout, I think it's a low probability sell. It's not a great buy, but I think we're always in long, and the bears have not done enough to flip it to short. Limit order bears, they might have sold the 30 high, but I think they'd rather sell 1 point higher, 2 points higher. So what would I do here? If I had to do anything, I would be buying stop below 33. Bears probably need at least a second leg up, despite the II and failed breakout. Second leg up, so what about selling? I still think we're probably going to stay always in long for the rest of the day. So I'm not eager to sell unless I see more selling pressure. I am concerned that 33 did not seem like enough of a resumption down to have a major trend reversal. So it makes me think we still might get down, maybe test the 33 low and get a double bottom, higher low, major trend reversal. But The only way, I'm currently flat, the only way I would sell here is with a wide stop and scaling in. Minimum goal is a measured move here, which takes us to around the 2 low. And then the other goal would be a measured move. You can see the gap, 38 low, 30 high. That would take us all the way up there. I do not think we'll get there. Stop order bears a second entry short, just like selling below 30 and selling below 11. It's a micro double top, 10, 12. But I still think always in long. And the pullbacks are small, so I'm not willing to sell with a stop. And I did not sell the 38 high, so I'm flat right now. In trading ranges, things that look like they should be high probability are not as high as you want them to be. Everybody knows we're always in long and that there probably are buyers below 40. But you can see not a lot of enthusiastic buying. I think a lot of the bulls would prefer that it trade down to the 33 low because they're wondering if the test down here is adequate. Have the bears given up enough, or do the bulls have to let the bears take control one more time and then clearly take control back from them before the bears will give up? This is not enough trend resumption for the bears to be a convincing higher low major trend reversal, and that increases the chances that we might have to test down and try to get the double bottom. A lot of times you get a reversal up and then you get the higher low major trend reversal, but the sell-off does not look like it's a big enough test of the low. When the bulls try to resume, they get stuck and the market has to come down again, and you end up getting a double bottom higher low. Here we got a single higher low. Here's a small double bottom. This is obviously not enough bars for higher low major trend reversal, so the odds were we had to test down. Here, not enough bars for a higher low. Here, enough bars, but it didn't work. And we ended up getting a higher low over here. Double bottom, higher low. Double bottom, and then this became a double bottom. Now we overlapped by one tick, 30 high and 41 low. If we overlap by a second tick, in other words, if we fall one tick below 41, that would increase the chances that instead of a measuring gap, we're going to test down to the 33 low. Right now, the odds still favor at least a little bit higher. Bulls, probably not a lot of bulls buying with a stop above 36. You might have some limit order bulls who bought the 1 low, the 2 low up here, And if we do, if there are enough of them, we'll try to get up to the 30, up to the 2 low. Probably bears selling above bars. What happens if 43 closes on its high? Will it be a measuring gap? I don't think so. I think the measuring gap is going to remain 36. And this is the second leg up from 34, 35, 36. Bear is trying to do the opposite of this. A bear breakout that reversed up. We're trying to get a bull breakout that is reversing down. The pullbacks are so small that selling with a stop below 41, 43, not worth it. And you can see limit order bulls who bought the 40 low, 41 low, made money, but the stop order bulls who did not. You know, a sign of a weak bull channel or a training range. So not a very good sell below 43. Let's say 44 is a big bear bar. Well, you know, the bears still have to get down below 33, and chances are the market will form a double bottom around 33 if we start to go down. I think the bears, I would not be selling with stops. If you're selling, you had to be selling above bars, not below. And for the bulls, we're still always in long. Bull, IOI, what do? Well, we're still always in long, and the bulls are maintaining the one tick overlap 30 high, so the odds still favor the bulls. But, you know, 8 bar tight range, you know, really not a strong buy. I think most bulls would rather buy a double bottom 33, and for the bears with the pullbacks this small, a lot of the bears do not want to sell. So right now I'm waiting. That's a problem for the bulls, right? They should not have allowed it to fall again further below the 30 high. And that makes it likely that we're going down to the 33 low. This is probably a give up bar. You know, I don't know if we'll trade down for a lot of bars. I doubt that we'll trade down very fast. And I think the bulls will try to get a double bottom around the 33 low. As far as selling right here, you know, just look at the bars over the past 25 bars. Everything has been small. The movement has been small. And, you know, I would only sell above bars unless this becomes an extremely strong bear breakout, and that's unlikely. Limit order bulls will buy below bars, but they should not have allowed this to drop below 44. And I think a lot of the bulls now would rather buy down near the 33 low and not up here. Probably a give up bar. This is tricky as far as calling it always in long or short. The odds are we're going lower, but the odds are we're not going below 18. So this is probably a bear leg in a trading range, which means maybe we'll trade sideways to down for the next hour. Will the bulls buy above 46 if it's a bull bar? I would not. If we get 2 or 3 consecutive bull bars, I'll probably buy. But one bull bar, probably a give up. This is probably a give up bar. You know, like this, and you get a second leg down, or like this. Sometimes you trade down for an hour or more. So to me, what we have right now is a give up bar, and you can see the market tried to resume up twice and failed, and we got a little bit more down. And I think this is probably what we're doing right here. The bulls are trying to resume up, but I think they'll probably fail, and I think we'll get a little bit lower, maybe a couple legs lower. This is exactly what I was talking about. For the bulls, it's a failed bear breakout and a higher low and a bull trend. But I think probably more sellers than buyers here, because the bulls should not have allowed the market to drop 2 ticks below the 30 high. So, normally I would be thinking about buying here, but given that the bulls defended the support 1 tick below the 30 high several times and then failed, I think it's more likely there'll be sellers above 46 and we'll get a second leg down. Suppose we get consecutive bull bars closing on their highs. Well, that would increase the chances that this is a higher low in a bull channel. At the moment, I still think more likely we're going to get lower prices, but that's really a bad bar for the bears. I wanted to short the 46 high, but with it closing on its high, I chose not to sell it. So right now I'm trapped out looking to buy lower or waiting to see if we start to accelerate up and then possibly buying higher. 3 consecutive bull bars. That's that's bad for the bear case. The bulls have totally reversed the bear breakout. 1 bull bar closing on its high reduces the chances of a second leg down, and then you get 2 that further reduces the chances. And now we have 3 bull bars, 2 closing on their highs. I think probably buyers below 48 or 49, and this is probably the end of the sell-off. I don't know if we go much higher. We may simply stay sideways, but to me, this is a big enough problem for the bear case so that I think it's not worth being short. Stop for the bulls at a minimum, probably below 33. And even if we get there, probably buyers 46 low, 33 low, 23 low. Probably 70% chance we've seen both the low of the day and the high of the day. I think really difficult to short with 46 closing on its high and then 47 closing on its high as well. So I'm flat. That's enough of a reversal up to undo most of the bearishness of 45, and it increases the chances that we go mostly sideways rather than down. Bulls trying to get a double bottom, but not many traders willing to trade. Just like we had to wait for 46 to see if it was a good bull bar. The same with 51. And even though it's a double bottom and a bull trend, and we're still always in long, it's not a particularly good buy setup because the range is so tight. Also, between 10 o'clock and 11:30, the market usually does something that looks like a high probability setup, but it's actually much lower probability than what it appears to be. So for the bulls to have a double bottom, 46.51, I think it's not worth taking the buy unless you're willing to use a wide stop. And for the bears, they should not have a lot of these three bull bars. And anyone selling here, I think, is selling too low. So for me, I'm going to wait. Even if you're trading this correctly, it's hard to make money. So if you sell the 46 high, I guess it went up 5 ticks, so you could have made money, sell the 46 high 1 point higher. And here, I still think we're always in long, but I am flat. A lot of traders are waiting to see if we come down and test 33 or 23. That absence of a good buy bar, 51, makes traders wonder if we're going lower. This is enough of a second leg sideways to down from 45. And I think we're still always in long, but it's a tricky time of the day. And 50-50 chance we'll get a lower high and a test down to the 33 low. So anyone buying here probably needs a wider stop. Stop entry bears below 43 only got 5 ticks. And that increases the chances that we're not going down, increases the chances that we're going to try to go higher. I am flat. The range is, for me, too tight to trade profitably. Stop order trading has been bad, right? Buying above 39 or 41 or 46 or 51, selling below 40, 42, 43, 48. So that's the past 8 stop entry trades have all been losers. Very tight range. So it's a limit order market. Most traders, I think, should just wait. For a double bottom like this, I often buy above 51 if it is a bull bar, but with the doji, I did not buy it. Let me turn this into a bar chart. Here's the bar chart. I'm going to flip it upside down. Okay. When you look at this, you see a strong bull trend and a two-legged pullback and a breakout to a higher low and a double bottom bull flag. So when you look at this, if you just look at this chart, not knowing it's an upside down E-mini, I think it looks more bullish than bearish. We have 2 legs down, we have a reversal up, and a pullback to a wedge bull flag, 1, 2, 3, a breakout, and a double bottom. So this looks bullish, and therefore the actual E-mini is bearish. Right now, to me, it's not as obviously bearish when I look at the E-mini itself, but when I look at the upside down version of it, this looks bullish, and therefore, since it's an upside down E-mini, it means the E-mini is bearish. And just looking at the candlestick chart, to me it looks pretty neutral right here. If you add more bars, you can argue that we'll get down here. I talked about that at the end of June when we had that huge sell-off. At the end of June, we got back down to the low, but it took a few days. Here's that big sell-off. That's not it. Let me go back further. Here's that big sell-off. And here it is right here, huge sell-off. And it took about 5 days, and we actually did get all the way down there before we bounced. And we have a big sell-off here, and I think we'll test down, but this is not, it's not clear at all whether this is the start of the test down or whether we go higher first. On the 5-minute chart, this is completely neutral. We were up big, we were down big, we're halfway back up, and we've been in a tight trading range for 30 bars. So 5-minute chart, perfectly neutral. 51 being a doji is not random. It's a doji because the bulls were unable to make it a good bull bar. And that is important. It's the market telling you that this is not strongly bullish. And therefore, it lowers the probability of buying that double bottom higher low major trend reversal. And I think there's a 50-50 chance we're going to test down at least to the 33 low. 50-50 chance the bulls will be successful and we'll get back up to the 2 low area. Triangle, but a very tight triangle. Triangle's a tight trading range. This is a very tight range. Still always in long, so slightly more bullish than bearish, but I think very difficult to do anything here. You certainly could buy for a swing. It's still on the swing above 46, above 51. For the bears, I don't know, I have problems with the bears not making money, selling below 43, and then bad sell signal bars 48 and 54, whereas the bulls have a decent buy signal bar 46. So I think it's slightly more bullish than bearish, but I think probably better to wait. In general, a triangle, 50% chance the first breakout fails and reverses. 50% chance when you get a successful breakout, it'll be up. 50% chance it'll be down. I think this is slightly more bullish than bearish. We never really went always in short, so we're still always in long. But every bar that gets added to this makes it closer and closer to 50-50. It's very close to 50-50 right now. 15-minute chart. When's the last time you've seen 4 or 5 consecutive inside bars on a 15-minute chart? A very tight range. Bears trying to get their trend resumption. So it looks like 45 probably was a give-up bar, but it took a lot of bars before the bears tried to get their resumption. And a lot of traders do not want to sell low. A lot of traders are buying the 46 low instead of selling the 46 low. I am currently flat. I did not sell on the 60 low. I obviously did not buy it, but I'm flat. Order bulls buying 51 low, so far trapped. And bears 45 give up bar, second leg down likely, and 62 might be that second leg down. It may simply be 1 bar. Sometimes when you have these give up bars, they take 10 or more bars to get the second leg down. 1, pull back, 2, and we're about that many bars here. 1, pull back, 2. Is 62 enough of a surprise to have 2 legs down? It might be, plus we got room to the 33 low, so I think we're probably going a little lower, but really not a good location to sell. Too low in a 40 bar tight trading range. When you look at that, you say, wow, I have to sell. Or you look at that and say, wow, it's near the bottom of a 40 bar range. It's better to be looking to buy. It's better to be looking to buy. hard to buy above 63 and too low to sell. So best choice flat. I think buying the 51 low probably was okay, although I did not do it. And I'm not willing to sell down here. Probably buyers below 63, buyers below 33, buyers below 23. You can see we broke out below here, but did not go down very far. And then we got a bull II, or an II with a decent bull bar. And even the rally that the bulls got was not all that big. But this is probably what the rest of the day looks like. When we finish selling off, we'll get a bounce, but it's not all that big, and we'll stay in the 4-hour range. Not many bears willing to sell 46 low or 63 low. Probably buyers there. We still have room to other lows, 33, 23. So anyone buying here, they need to stop probably around the low of the day, which looks like a lot, but it's really not. It's about 3 points. As far as selling here goes, it's a very tight range, and this is where bears take profits, not where bears sell. So I'll either be getting out of shorts or considering buying, but using wide stops. We've been trending down for 20 bars, and in the absence of a very strong buy, it's better to be buying with limit orders below bars than with stops above. And I would not be swinging shorts. I think the odds are it's going to remain a trading range for the rest of the day, and selling at the bottom of a 30 bar range is a very difficult way to make money. You probably lose money. Buy or sell down here? Well, I still think it's mostly a trading range day, so I'm only interested in buying when it's below bars, below 46, below 63, below 33 if we get there. I am still flat at the moment, but if I were doing anything at this minute, I'd be buying at the market because we're below 63, below 51. Bulls starting to get some evidence of a wedge bottom. Bear breakout 45, second push 51, and then 62, 66, or 56, 62, 66. But if you're taking the buy, I think you still need a wide stop, because buying in a bear channel, especially when it's very quiet like this, it can keep working lower before it finally goes up. However, I still think that traders buying here will be okay, and traders selling here probably will not be okay. So I would either be buying or waiting. Not a strong buy, but if I had to do something, I would buy. I think we're probably still always in long. And you have to ask, why are the bulls allowing an 8-bar bear microchannel and not getting a good buy signal bar on 66? It's because they're not strong. And that makes stop entry bulls not want to buy above 66. Limit order bulls who bought 62 low probably will make money. And the bears, even though we've been trading down 20 bars, 25 bars, I would only look to buy down here. The range is tight, and that makes it really hard to make money. We're probably not going to move very far up or down. Bears trying to get a third push down, 62, 66, and 68. They want to get below 33, but probably buyers below 33. And probably buyers right around where we are. I would not, it's just too low in a trading range and too low in a bear swing that is just too weak to be selling, but not very good buying either. Limit order bulls 62, got their 5 ticks. The bears want a continued bear channel, lower highs since 43, but I think we're still always in long, and it's too low, I think, to sell. However, most of the bulls are scalping and not swing trading because they believe the market's going to stay mostly sideways. Bulls trying for by the close. I think it's probably a little early. If it's not a particularly strong rally and gets a pullback, here or the next bar, then it could make it all the way to the close. Like here, 4 bars and then a pullback. But if it just goes straight up 5 or 6 bars like this, less likely to make it. Like this, too strong. As soon as it went below the bear bar, the bulls took profits. Bears again trying to top out at yesterday's high. It's been resistance for the past several hours, but 3 consecutive bull bars, or 2 bull bars, 4 bars up, still always in long. Probably buyers below, but again, probably not going to go very far. Remember I said that second hour did not look like it was strong enough to reverse that, and there'd be sellers above, and we'd go sideways. That's what usually happens when you get a reversal that does not look very strong compared to what took place before. I think most of the bulls scalped out. I think it's more difficult to make the math work buying up here. You're buying at the top of a 4-hour range, betting that we'll get the measure move up. Bulls want trend resumption, rally, pull back, and then rally back up to the too low. I am flat, and this is too strong for me to sell. If we go sideways a little bit, or if we go up very strongly in reverse, I might sell. And it's by the close, and it's trying to break out. I might be able to get one more buy scalp up here, but I have to say I'm pretty hesitant to take it. The bars are not that big, and we've been sideways for 4 hours. Bears trying to get the double top, but too many bars up. So not a strong short, and it's not all that climactic, and therefore not a strong short. And by the close, bulls 72 have so far 4-tick trap. So they're deciding whether to hold or get out. I did not buy the buys. The bars are, there's just not enough momentum up. The bars are too small. When you have a by the close rally like this, if it's climactic, traders will often sell for a scalp at the end of the day like this if they get a decent bear bar. Here are the two examples that I talked about. Very climactic by the close rally, and if the bears get a decent bear bar, the bulls will exit 1 tick below that bear bar, and the bears will sell, trying to make a couple points down. Here, what happened here? Why did it not go down? In part because the market started to go sideways there. You can see the bear bar was a low 3, low 1, low 2, low 3. So the bulls had a lot of time to get out here or here, and it was not a climactic finish, and the bulls were not desperate to get out. And to me, that is a more dangerous short. I think, yes, the bulls get out below the bear bar, but the bears do not sell. Here, very climactic, and the bulls, this is the bulls' only chance to get out, and they did get out, and they did not want to buy again. So which is today? Is it this or this? I think it's probably more like this. It just doesn't feel like it's an emotional buy climax with everyone buying desperately, and on the first reversal, everybody gets out. This does not have a lot of momentum. It's not like everyone's desperate to buy. Everyone's cautious. Everyone's hesitant to buy too high. And therefore, if we do get a bear bar, the bulls will get out below, but I think the bears will not short. I think it'll be more like this than like this. This is much more climactic, much more extreme. Here we had several overlapping bars, and it's a low 3. The reversal down below the big bear bar was the third reversal down. This was the first reversal down with very little overlap. Does that mean you can buy below 75? Arguing that the bears would get trapped? I don't think a lot of bears will sell. There's just not, this is just not climactic buying. Theoretically, you had some bulls who bought that too low, and they'll buy more strong bull bar, like 18, and they're trying to get back to that too low by the end of the day, where they could get out break even on their first entry, and then with a profit on their lower entry. For the bears, you got a failed breakout, but too much buying and not climactic enough, I think, for the bears to sell. Bulls, I think, get out below a bear bar, and I think the entire rally is not big enough for the bears to take the short. More likely we'll find support around this resistance level and this support level. So this resistance becomes support, and this is support. So I think bulls get out, but bears do not short. You can see how difficult it is if you're not quick to make decisions. Anyone who bought the close 71, 72, 73, 74, 75 and did not take their opportunity to get out below 76, they're now holding a losing position. Can we reverse all the way down? Here we totally reversed the buy the close rally. Here we went sideways. This is obviously more like this today, it turns out, but I still think we'll find support here. Well, I'm trapped out. I did not take the buy the close, and I did not take the sell. Looks like a lot of volume. And you see how it quickly goes up and down, up and down, up and down, bar 78. That usually represents hundreds of contracts per trade. 165,000 contracts. Now, why would bar 78 have 165,000 contracts? It's because it's the last day of the month. And last day of the month, last day of the quarter, last day of the year, bar 78 tends to have very big volume. Anyway, it was a pretty good day for swing traders today. We were on the daily chart. This is the 9th bar in our tight trading range. Friday was a bull IOI, a bull inside bar after an outside bar, and therefore a buy signal bar, and we gapped above Friday's high, triggering the buy, but reversed down with the second entry short. Today's also the last day of the month, and this little sell-off is putting a little tail on the top of the month. It's 4 consecutive bull trend bars. We have a high one buy here in April. Normally when you have a high one after a buy climax at resistance, like a measured move target, the market goes up 1, 2, or 3 bars and then pulls back for several bars. And we're up at 3 bars. I don't know if we're going to pull back in August or September, but I still think that the market's going to have a hard time going much higher because this is extremely climactic. We have on the monthly chart a 9-bar bull microchannel, which is unusual. And we have a high one after a buy climax at a measured move target. And we have a parabolic wedge, 1 pullback, 2 pullback, 3. We have a strong breakout pullback, second leg up. All of those are reasons for the market to pull back for a few bars. A few bars is a few months, and an obvious target is the bottom of the most recent buy climax. We have a 4-bar buy climax, so that would be the target. Weekly chart, I'm losing track of how many weeks we've been above the weekly moving average. I think it's 37 weeks now. In the 17-year history of the E-mini, the market has never been this overbought, in my opinion, at least by that measure. And betting that it's going up much further from here, I think, is a very low probability bet. I thought we were going to pull back around 20 or 25 bars somewhere in here, and we tried twice, did not even get close. That partially relieved the overbought condition, yet we're still continuing up. The more bars that get added to this, I think the bigger the correction will be. I had been talking 100, 150 points. Now I wonder if it might be 150, 200 points. Instead of 4 or 5%, it might be 8%, maybe 10%. I still think this is the target. It's a tight trading range, a triangle, possibly a final flag. So I think we're coming down here. Daily chart, no credible top yet. This looks the same as this and this and this. Looks like a trading range and a bull trend and this. And we've had many, and every one of them has had reasons to sell. Yet every time the market reversed down, the reversal was minor. Bulls bought it and the trend continued higher. And while it's more likely than not that we'll go a little bit higher, I just don't think we can go much higher because of all the climactic trading that we have on the weekly and on monthly charts. On the 5-minute chart, I always am amused by certain patterns that happen, and they're fairly predictable. And today we actually had 3 or 4. I didn't trade them all as well as I would like, but I traded some of them. We broke above yesterday's high, and then bar 1, it traded below 1, and therefore it's a failed breakout yesterday's high, but nobody's going to sell below that bull bar. And then bar 3 is a bear inside bar, and that is a second reversal down from yesterday's high. So it's a failed breakout yesterday's high, second entry sell with a decent sell signal bar. And that is a reasonable swing short. I placed my limit order to get out at 15 ticks profit instead of 16 ticks profit. And sometimes I just quickly drag it down to what I think is 4 points, and sometimes I don't make it exact. And then if I'm talking, a lot of times I don't check what it is. We got down to bar 8. The bulls tried to reverse up. You can call it a high 2 with bar 1, but I thought the momentum down was too good, and I thought yesterday we had a spike pullback channel or spike pullback channel, and the odds were we'd get down to the bottom of the channel. And therefore, even though 8 is a pretty good bar, or opening reversal at the 60-minute moving average, I thought the 5 bear bars and the magnets below made it likely we would fall below 47, but possibly not below 23. And that's what happened, or 24. Whenever you have 2 support levels in a market that is in a trading range or a bear trend, you're probably going at least below 1. But if it's a trading range, you usually do not go below the second, and you reverse up. And here we had a wedge. I thought the channel was too tight for a major reversal, and we went up. I thought this was not enough bars for a higher low, major trend reversal 33. And the market agreed. We went up a little bit and we went sideways. 66, 68, you can call it a higher low, major trend reversal. But I thought we were just sideways, too many bars. The bulls lost all momentum, and I thought the odds were against a big rally from there. We broke above 43, reversed down. We had a buy the close finish, and because I thought it was not climactic enough, I did not sell below 76, but the traders who did made 2 or 3 points. For stop entries today, buying above 1 possible low of the day on the gap up. I thought the bar was not particularly big. Plus, we're at the top of an 8-day tight trading range, or top half of it. You know, I think that's not a good location. This is pretty interesting right here. It's a nested head and shoulders top. Head and shoulders top pattern is often unnested. We have a left shoulder, head, right shoulder, but the right shoulder has a left shoulder, head, and a right shoulder within it. That makes it slightly more reliable, slightly higher probability that the bears will get a reversal. The measured move target would be the height of the pattern, maybe the top of this cell climax, bottom of that cell climax, takes us down to around the open of July into this gap. You know, who knows if we get there. That's really not all that far down. It's about 30 points below where we are. That, you know, I think the correction that we're going to get is going to be 2 or 3 times bigger than that. So if we do get down there, I don't think that'll be the end of the correction. Anyway, for stop entries today, I thought the first good one was selling below 3. Failed breakout yesterday's high, second entry sell. And as far as selling below 10 goes, I'd rather sell below 11. You can argue it's a micro double top, up on 10, down on 10, and then up on 12, and then down on 12. And then I thought we would go sideways here, and I thought we'd find buyers around the bottom of the channel, which we did. So therefore, buyers at the 7 low. And I always pay attention to that. And the bulls above the 7 low made money. Bulls above the 14 low made money. Therefore, we're probably going to have a reversal up. I don't know if the reversal up will lead to a bull trend or a trading range. And it ended up leading to a trading range. We had the tail on the entry bar and then weak follow through here. And to me, this looked like a bull leg in a trading range. The bulls tried to get a higher low major trend reversal here, but the bears did not resume this bear trend enough to make me think it was a credible double bottom. And therefore, I thought if we rallied up, we'd have to come down and test it again. And the bears did a better thing over here, a little bit more bearish. You know, this is more neutral, but not a good buy signal bar. Not a great looking buy, not a great looking sell, but the logic was good for both. Here you can argue wedge bull flag, 1, 2, 3, big high 2, 1, pullback 2. And when you get these give up bars, a lot of times the market will go sideways for 10 or 15 bars and form a slightly lower low, and then the bull trend will resume. And this is an example of that. Anyway, for stop entries, the ones that made sense, I thought selling below 2, maybe selling below 11, buying above 18. And then here, really none of it is very good stop entry trading, maybe buying 66, 68. And then if you want to take a chance, selling below 76. Buy the close, sell the close. I thought we were always in short on 4. So theoretically, sell the close 4, 5, 6, 7. 7, very big bar, close to the targets, the 47 low. I mentioned that there probably would be some buyers there, but I thought there'd be sellers above 9 or at least a little bit more down. I think this is really not good sell the close, especially once the 7 low bulls made money. And then probably went always in long somewhere in here, 21, 22, 23, but weekly bullish, and the bulls probably would need a major trend reversal before we could go a lot higher. And they just couldn't get enough momentum up, and the bears could not get enough momentum down. And instead of a strong reversal up, we ended up in a tight range. I think it was not buy the close, sell the close again until maybe 71, 72, 73. 74. Once you've had 4 or 5 by the close bars, 73 or 74, you're really taking a chance at the end of the day by the close rally. Usually it lasts 5 or 6 bars and then reverses. And so 1, 2, 3, 4, 5, 6, 7, and then reverse. So if you're buying after the 4th or 5th bar, you had better be able to get out below 76. You had better have the emotional ability to place the stop to get out. And then some traders obviously would take the short. Limit orders today. The first one I thought that was reasonable was selling above 9, but you needed to stop way up here. And then I paid attention to whether traders bought below 7, and they did. And then I ended up buying below 14. Probably sellers above 14, but not much more down. Buyers below 22. And then the rally is so weak here, it makes me think we're going sideways, but I think we're always in long. Probably buyers below 26 and let's do 28 and 30. And then up here, 36, a breakout above the double top, probably at least a small second leg up, but tight trading range and a limit order market. Probably not worth trading in here. But if you are, you're buying the 41 low, trying to buy more 1 point lower, and then you're trying to sell highs and sell more 1 point higher. Here, I mentioned that bulls probably would buy the 57 low, 51 low, use a wide stop and scale in, and probably buyers below here, even below here. And then selling 60 high, selling 43 high. I think if you're a computer, you can do it, but you're fading a buy the close rally at the end of the day. Another problem with this buy the close rally is it probably started a little bit early, 12:15 instead of 12:30. And if it starts too early, it usually does not make it to the end of the day. August, September, that Milanovic guy, I think that's his name, Drago Milanovic, I can't remember his name, the JP Morgan hedge fund guy. I think he's one of the smartest guys on the street. And, he's saying buy puts or put spreads because his logic is interesting. I'll put up the cash index. If I remember correctly, he said buy a 2450 put and sell a 2300 put down here, right? This is the daily chart. So he's saying buy that put and sell that put January. So the short put is usually where you expect the market to fall to. So he's saying he expects the market to fall to 2300 by January. And that's, that's about 150, 200 points down below where we are. And he also said an interesting point that the put protects you down to 2100. So he's thinking that the sell-off is going to be between, or 2150. He thinks the sell-off is going to end between 2150 and 2300. So he thinks we're coming down to this general area. I was talking about the correction here. He's saying the correction is probably, no, I'm sorry. I was saying the correction is going to be here. He's saying it'll be at least here and maybe even down here. So I'm really fascinated by what he's saying. And if you ever listen to him talk, he does not talk like you and I talk. You and I talk about support and resistance. He talks about computer algorithms, and for example, he's saying the VIX now is around 10, which is extremely low, and he says that the algorithms are designed to take on more risk when the volatility is low, and that means that basically too many institutions are very, very heavily leveraged, more heavily long than they would otherwise be. And if we start to go down a little bit, the volatility will pick up and they'll have to quickly reduce their positions. And since their positions are so unusually big, a little bit of selling will trigger a whole bunch of selling, and we could drop pretty quickly because of the low VIX reading. So I think that's going to be interesting. I still think this entire rally looks like a bull channel, high, low, high, low, high, low, high, and you got a spike up here and then a bull channel. It looks like a spike and channel bull trend. And as you know, 75% chance you're going to get a bear breakout below the channel, either by going sideways or down. And usually the market tries to test down to the bottom of the channel. So when I look at the chart, I see the same targets that he sees, but his logic is completely different from mine. You know, he's looking at it as a quantitative analyst, and computer models and computer algorithms and what they do when the volatility is low. And but his conclusions are the same. You know, he's expecting the same thing. He's expecting a correction. He's saying that the trigger probably will be international Fed meetings all around the world. He said a whole bunch of Feds have major meetings in September, and if enough of them end up making a similar change to Fed policy in their different countries, the result could be a sell-off. You know, the market might be surprised that if so many Feds do the same thing, like basically all start to tighten money and raise interest rates, and the market might not be expecting that. You know, the market might decide that it's not priced for that, and the price is currently too high, and it has to adjust the price down to the new Fed decisions, like Fed policy. Question: I sold the close of bar 5 for a swing trade, but scalped out for 2 points at the moving average. Thinking that the channel, okay, sold the close of bar 5 right here, and he scalped out for 2 points at the moving average. Thinking that the channel up is tight in itself is probably part of a minor reversal. Is that an acceptable way to manage the trade, or should I have waited for a swing profit? My thought about that is, you sold the close of 5, 3 consecutive bear bars, failed breakout yesterday's high, second entry sell. That's a smart trade. And you can see, look at the open of 6, okay? It's right at the close of 5. That means as soon as 5 closed, a lot of traders were pretty eager to sell. Not much overlap, 6 and 5. Actual risk was probably only, 3 ticks, 4 ticks. And he exited with 8 ticks, 2 points. He got a reward twice his actual risk. Mathematically, that is fine. His logic is the rally up to here is so strong, it's unlikely that we'll go into a bear trend. More likely there'll be buyers somewhere around a 50% pullback, and therefore he exited with 2 points somewhere around bar 7 or so. I think that's perfectly fine. Anytime you take any trade and you exit with a reward that's twice your actual risk, the math is good. Anytime that profit is at least 2 points, I think that's good as well. You could take 2-point trades all day and make a really good living. So you took one of them, and had you taken others, had you taken a few of them and traded decent size, you can make a living doing that. So I think selling the 5 close made sense, and then taking 2 points profit, especially when you're entering late, that made sense as well. You knew that there'd be buyers around 4 points down, and you're entering already, a 1.5 points down. So it may bounce up and form a low of the day, 4 points down. So I think what you did is good. So where do we go from here? As you know, I think we're going down. To me, we may go a little bit higher. Maybe we'll get up to the 2,500 area. One of the funny things to me is back over here when we first got to 2,400, maybe over here, I said that the next 100 points are probably down, that we probably get to 2,300 before we get to 2,500. Obviously, that's probably not true anymore, but we'll probably still get down to 2,300. And if we do get to 2,500, we probably will not get far above it before we first test down to the 2,300 area, 23, 2350, somewhere down there. The one thing I was confident of was that we would correct, And the one thing I could not determine was the timing. And that makes it hard. You know that it's going down. I still know it's going down. I still believe it's going down, but there's no credible top yet. By the time traders believe it's going down, it'll already be down, 60 or 70 points, right? By the time traders say, oh yeah, it's going down, for the traders to make that conclusion, the market will have to be somewhere down here, and they're betting on a second leg down. And so that's one of the hard things. By the time, the bears have taken control, the move is already half over. Okay, August, September, historically the two worst consecutive months of the year, and very, very climactic. I don't know if we're going to sell off sharply. I think that we're going to correct, and I think we'll get down to the 2300, 2320 area. And I have no idea whether or not we've started, but I am pretty confident that we're not going a lot higher before we correct. All right, hope everybody has a good weekend or a good night.